But switching focus, the Adani Group has bettered its overall credit rating and also de-risked its balance sheet to a certain extent. They've pruned debt. Anushi takes us through the key takeaways of what's come through. Anushi.
Right. So now what we are looking for Adani Group in particular is the improvement in their credit ratings. Now across the group companies, if we see what has happened in terms of where Adani Enterprises is, Adani Green Energy is, we are looking at a subsequent change in the ratings for all of these companies from what it was in April 2019 to what it is in April 2025. Just for context, if we see Adani Power also, what was the rating in BB Plus has now changed to AA, so double A. So that's the overall picture that we are seeing in terms of where the credit ratings are concerned for some of these businesses. Of course, rating change across the board that we are looking at for the group companies. But apart from that, it's the cash book and the balance sheet which is in focus. Now, if we are looking at the cash book which is there, they had a cash balance of about 9,586 crore. This in context to the overall gross debt we are looking at is at 56,931 crore. So if we take the ratio also between that, so that translates to about 16.84%, which is much higher than the minimum requirement of 5% that is there. So that is something which is interesting that for the Adani Group companies that we are looking out for. In fact, company has comfortably de-risked its balance sheet over the course of these last few fiscals that we are looking at. But apart from that also, in terms of, let's see how the breakup is in percentage of total debt. So PSU banks about 18%. USD bonds 23% is what we are seeing. Along with that, NBFC and FIIs have about 25%, while others like DIIs and private banks have a comparatively lower mix in terms of where their long-term debt emits from, and global international banks about 26% is the kind of ratio that we are looking at. But it's the EBITDA overall which has been impressive for the street, especially this is with an overall EBITDA standing at 90,000 crore that we are looking at. Of course, key contributors being something like Adani Power with almost a 24,000 crore of EBITDA that we are looking at. Adani Enterprises there as well, but even Adani Ports is in focus here, seeing these kind of higher numbers that we are looking at. Yeah, that's at the level of 20,471 crore that we are seeing. What's kind of fueling this growth if we are looking at? So transport and cement, both of these have recorded growth. Cement, in fact, up over 69%, almost 70% is what we are seeing. If we talk about the core infra business, which is there now, the incubating infra has crossed about $1 billion of EBITDA, while we talk about the other vertical which is there, that's Adani Ports, they have crossed $2.5 billion of EBITDA as we speak. So it's the improvement in terms of where the margins have concerned. We are looking at a consistent improvement in the margin profile as well. Now, in terms of how it has performed in comparison with the Nifty, Adani Group has delivered returns that are 6% higher than that of Nifty 50. So investors are also looking forward to Adani Group's performance. We've seen subsequent improvement in across all the key Adani stocks which are there, and that is why they are in focus. It's the improvement across the key verticals and the metrics that we are seeing. Back to you.
Okay, so that's the view coming in with regard to how, or rather the metrics coming in with regard to Adani Group. Let's quickly take a break though. On the other side, what we're going to do is we'll get you the key stock of the day, and we'll also start talking individual names, especially the ones that are buzzing, something like a Colgate, something like an IndusInd, some perspectives coming your way. Stay tuned.